This is not a financial advice. What if the biggest thing holding you back as a trader isn't your strategy? What if it's your obsession with being right? Because somewhere along the way, trading can quietly become a prediction game. You look at the chart, you form an opinion. Bullish, bearish, up, down. Then you become emotionally attached to that opinion. Now the market isn't simply moving, it's challenging you. If price moves in your direction, you feel intelligent. If price moves against you, you feel wrong. And suddenly, you're no longer managing a trade. You're defending a prediction. That's where things begin to fall apart. Because the market doesn't care what you predicted. It doesn't care how many hours you spent analyzing the chart. It doesn't care how convincing your bias was. It doesn't care how many other traders agreed with you. Price is going to do what price is going to do. And the sooner you understand that, the sooner your trading can change. The best traders aren't necessarily the people who predict the market most accurately. They're the people who know what to do when their prediction is wrong. That's a completely different skill. And it begins with one uncomfortable realization. You don't need to know what happens next. You need to know what you'll do when it happens. Think about that for a second. A prediction says, price is going higher. A trading plan says, if these conditions occur, I will enter. And if this condition occurs, my idea is invalid. Those sound similar. They're not. A prediction demands certainty. A process accepts uncertainty, and trading is built on uncertainty. That's why the first sign that you've stopped trying to predict everything is simple. You become comfortable being wrong, not because you enjoy losing, but because being wrong no longer threatens your identity. You can look at a chart and say, I expected price to move higher. Then price moves lower. You don't argue. You don't move your stop. You don't search for another reason to stay in the trade. You simply accept, my idea was invalidated. That's it. No drama, no revenge, no need to prove anything. You were wrong about that specific scenario, and now you have new information. That is a powerful psychological shift, because once you stop treating being wrong as a personal failure, you become much more flexible. You can change your bias. You can adapt. You can wait. You can step away. You can accept that the market has information you don't have, and that humility is not weakness. It is a trading advantage. The second sign is that you stop needing every trade to confirm your intelligence. This is one of the most dangerous psychological traps in trading. You enter a position, it starts working, you feel smart. Then price reverses, suddenly, you feel stupid. Your emotional state changes because your identity has become attached to the trade. But a trade is not a personality test. A winning trade doesn't prove you're brilliant. A losing trade doesn't prove you're incompetent. They're simply outcomes within a probabilistic environment. That's why you need to separate the quality of the decision from the outcome. You can make a good decision and lose. You can make a bad decision and win. That sounds simple, but many traders struggle with it because the result is visible immediately. Your account balance changes, your emotions react. Your brain wants a simple explanation, but probability doesn't work that way. The goal isn't to be right on every trade. The goal is to repeatedly make decisions where the potential reward justifies the risk, according to your tested framework. That's a completely different mindset. You stop asking, was I right? And start asking, did I execute correctly? That question is far more useful because you can control execution. You cannot control the outcome. And this leads to the third sign. You stop reacting to every candle. A trader obsessed with prediction watches price like a person waiting for a verdict. Every candle feels important. Price moves slightly against the position. It's going to reverse. Price moves slightly in favor. It's going to continue. Price retraces. Maybe I'm wrong. Price pushes again. Maybe I'm right. You're constantly interpreting, constantly predicting, constantly changing your emotional position. And that creates exhaustion. A process-driven trader behaves differently. They already know what matters. They know what price needs to do. They know what invalidates the idea. They know where their risk is. Everything else is noise. This doesn't mean ignoring the market. It means refusing to emotionally interpret every movement. You're watching for information that matters to your plan, not searching for evidence that proves your prediction. That's a major distinction, and it can completely change your execution. The fourth sign is that you stop moving your rules to fit the market. This is where prediction becomes particularly dangerous. You have an idea. Price moves against you. Your stop is approaching. Instead of accepting that your idea may be wrong, your brain starts producing explanations. Maybe liquidity is being taken. Maybe the market needs more time. Maybe the move hasn't started yet. Maybe I should give it more room. And suddenly, Your original plan has changed, not because the system changed, because your emotions did. That's not adaptability. That's rationalization. Real adaptability means responding to information according to predefined conditions. Emotional flexibility means changing the rules because you don't like what is happening. Those are completely different things. If your stop is invalidation, then the stop means something. If the trade reaches invalidation, your idea has failed. You don't need another explanation. You don't need to negotiate with price. You accept it, then you move on. The fifth sign is that you stop needing the market to prove you right. This is where trading becomes strangely peaceful. You can have a bullish bias, then the market becomes bearish. You don't care. You simply adjust. You can expect a certain setup. It never appears. You don't force it. You can identify a beautiful opportunity, but the entry is missed. You don't chase. You can spend hours analyzing a market and eventually conclude there is no trade. And instead of feeling disappointed, you feel satisfied because you followed your process. That's maturity. You understand that no trade is still a decision. Waiting is still a decision. Walking away is still a decision. Protecting capital is still a decision. And sometimes the best trade you make is the one you never take. The sixth sign is that you stop confusing confidence with certainty. This is important. A lot of traders think confidence means believing strongly that their trade will win. It doesn't. That's certainty. And certainty can be dangerous in an uncertain environment. Real trading confidence sounds more like this. I don't know what happens next, but I know exactly how much I'm willing to risk. I know what would make my idea invalid. I know what conditions I am waiting for. And I know what I will do if the trade loses. That's confidence. You're not confident because you know the future. You're confident because you're prepared for multiple futures. Price can go up. You have a plan. Price can go down. You have a plan. Price can stay sideways. You have a plan. The market can do something completely unexpected. You still have risk controls. That's much stronger than pretending you know what's coming. The seventh sign is that you stop trying to recover emotionally. This is where prediction and ego can become dangerous together. You make a prediction, it fails, you lose money. Now your brain wants to prove the prediction wasn't wrong. So you enter again, then again. You're not trading anymore. You're trying to rewrite the previous outcome. You're trying to get the market to apologize. But the market doesn't apologize, it simply moves. The only person still fighting is you. That's why one of the most powerful things you can learn is how to let a trade end. If you're wrong, you're wrong. Close it, record it, learn from it, move forward. Don't carry one trade into the next. Don't make your next position responsible for fixing your previous one. Every trade deserves to be evaluated independently according to your system. That is how you prevent emotional debt. And eventually, something begins to happen. Your trading becomes quieter. You stop needing constant confirmation. You stop watching every candle. You stop changing your bias every 5 minutes. You stop searching for reasons to enter. You stop trying to catch every move. And you start waiting. Waiting for your setup. Waiting for confirmation. Waiting for your conditions. Waiting for the market to come to you. That doesn't mean you're passive. It means you're selective. And selectivity is one of the greatest advantages a trader can develop. Because the market will always give you reasons to act. There will always be movement. There will always be volatility. There will always be another candle that looks exciting. There will always be another trader telling you about the opportunity you missed. If you respond to everything, you're no longer trading a system. You're reacting to the environment. The market becomes your emotional remote control. One candle makes you excited. Another makes you afraid. Another makes you greedy. Another makes you frustrated. And you're constantly being pulled around. But once your process becomes stronger than your prediction, something changes. You become harder to manipulate emotionally. You can watch price run without you. You can watch a trade lose. You can watch another trader make money. You can watch the market completely ignore your analysis and still remain stable because you never needed to be right. You needed to be prepared. That is the real difference. A beginner asks, where is the market going? A developing trader asks, what is my bias? A mature trader asks, what conditions would make me act? And that final question is powerful because it moves you away from prediction and toward preparation. This is important because your brain needs a replacement behavior. You can't simply say, I'm not going to chase anymore. You need to know what you will do instead. Miss the move, record it, review it, move on. No revenge trade, no emotional entry, no changing the rules, and finally, measure yourself differently. Don't measure your day only by profit. Measure execution. Did you wait? Did you follow your model? Did you respect risk? Did you avoid forcing trades? Did you stop when you were supposed to? If the answer is yes, you can have a profitable trading day even if you made $0, because you strengthened the behavior that eventually produces consistency. And that's the part most traders miss. A profitable result can come from bad behavior. A losing result can come from excellent behavior. You have to separate the outcome from the decision. That's how professional thinking develops. The final shift, eventually, something strange happens. The market becomes less exciting. And that's actually a good thing. You stop needing the adrenaline. You stop needing to be involved. You stop feeling personally attacked when price moves without you. You stop chasing. You stop forcing. You stop comparing. You start waiting. And then you realize that patience wasn't keeping you out of the market. Patience was protecting you from the wrong market conditions. You weren't missing opportunities. You were filtering them. You weren't doing nothing. You were preserving your ability to act when something actually mattered. That's the trader you want to become. Not the trader who catches everything. The trader who knows what is worth catching. Because the market will always create another temptation. Another candle, another breakout, another move. Another trader showing a profit. Another opportunity that looks like the one you can't afford to miss. And your job is to remember. You can miss a trade and still have a great trading career. You can miss the biggest move of the week and still finish the week successfully. You can sit out an entire session and still be disciplined. You can watch price move without you and still be exactly where you need to be. Because your edge doesn't come from participating in everything. It comes from participating when your conditions are aligned. So the next time the market starts running without you, don't chase it. Take a breath. Look at your rules. Ask yourself, is this my setup? If it isn't, let it go. Let the market move. Let other traders participate. Let the opportunity disappear. You don't need to own it. Your job is not to capture every move. Your job is to wait for the moves that belong to your system. And when that opportunity finally comes, you'll be ready. Not because you were watching every candle, but because you had the discipline to wait. That is the trader you become after you stop chasing every trade. Calmer, more selective, more disciplined, and far more dangerous to your own bad habits. Because once you stop needing the market to give you something, you finally become free to wait for what you actually want.